receiving questions.
Then password, then the other side is our names. I wanna know
Wanna start with the questions, like I said, and after that we'll sort out the basics of how the strategy operates. So as usual, you guys have to unmute yourself, and after unmuting yourself, shoot your questions.
Hello, Brian.
Shashoba.
How are you?
Wonderful. How about you?
Oh, fine, thank you. All right. I just have a simple, I think it's a question that you've already answered, but I'm just going to ask it again. I know the strategy works in both directions. I just wanted to ask, is it more advantageous to trade in the direction of the trend, or you would not advise that we look for some sort of direction?
Okay, so to like, what do you mean, like to go with the direction of the trend? What are you trying to say?
Yeah, so let's say, for example, if the market is moving downwards, for example, we can take an example of NAS 100, NASDAQ. It has been moving down for the past, I don't know how long. So, but then of course, while it's moving down, it also moves up for some times. Would you recommend that we probably just trade it downwards, or in the direction of the trend? Or
I would,
yeah,
a footprint will be able to tell you that, all those things. Most, even if it's a sell, even if market, I mean the pair is trading on a sell or anything of that sort, the footprint will be able to give you that answer. Let me show you what I'm talking about.
yeah.
So if it has been trending down for quite some time, that means on a bigger time frame there was clearly a footprint to suggest that this thing will be going down, which there was. Like looking at the bigger structure here, should have even went to daily actually. Some could have used that one as a footprint. Some could have also used that one as the first layer. Apart from there, let's go into a much detailed form. There were answers for the sell that was happening here. Even it even started being aggressive from here, and there was clearly a nice setup. Footprint, simply first layer. You see the market broke the first layer here. And looking at the first divergence, the first divergence on this time frame that I can see with my own eyes is from this point where the stochastic was there, and that point where the market was there. Short. And stop loss at around there. So since from there, there's been a serious downward movement. But I want to show you something, even though, so since from there, the stochastic, I mean, the market has been going down very crazy, and you find yourself in a situation where you're still seeing buy on this pair, it's fine, take on that buy. But know that it can be very temporary, because let's say someone will use this as a footprint. Some will use that as a first layer. After that, they will enter a buy here, which will be very good in order to take this thing as a buy. And after you take that thing as a buy, immediately this thing goes into profit. If you can be able to analyze this, then you will see that it even went to a point where even the first layer, even the footprint gets broken. If the footprint even gets broken and you've also entered a buy here, meaning after the breakout of the footprint, you can simply close in that profit and look at the opposite direction, look for first divergence here and enter another sell. That's why I'm saying to you that the market will tell you when it is about to turn into the opposite direction. That's what I know. There's no way it is not going to tell you, especially if you are implementing the footprint. Cause I want to show you scenarios where you will think maybe this will be a buy or what. Some can do this, but and use that one as a first layer. So this was a false breakout. So this is the kind of a breakout that we can say, okay, this one we can actually look at, but if we can be able to see the market, I want to see the stochastic was around here. And you find a situation where the stochastic is even that side. Because when you, let's say for example, if you would have seen that much earlier and you said you've entered a buy here, you'll put your stop loss here. So this is another technique that can show you that, okay, if the market is not going into the direction it was going or the direction you anticipated, you always have the answer, because if it's not going with you, it is going the other way. Now, the trouble comes in where you don't know if it is going up or down. Now, immediately if it gets to a point where it hits the stop loss, meaning this footprint was accurate. As that footprint was accurate, you spot the first divergence. The first divergence after the breakout. The first divergence that you can be able to see, I'm not seeing anything. Let's check 1 hour from here. 15 minutes. The first divergence from that trade was from this point to that point. From this point to that point. And you will take a sell there. So that's what I mean when I said, okay, if the market is not going where you anticipated, you have the answer. You can still make profit. If you lost something here from the distance to where you've entered between the stop loss, you will quickly recover and make even more money that side. But like, it is very important not to be undecided, because that way you won't know if the market is going up or down, and you just confuse yourself, not having in mind that, okay, if the market is not going into my direction, it will definitely go into the opposite. Now, how do I take advantage if you're not going to, if it is going to the opposite? Because most people leave it. They just, if it's not going into that direction, the one they've estimated, they take everything personal. They feel like the market is against them personally. which is not. You just have to use the same principle you used, but in an opposite direction. Simple as that. So does that answer your question, man?
Yes, Nagin. I just have a follow-up question actually, because your explanation actually clarified my question. And I think this should be the question which you already answered. The question should then be, if we have the footprint showing, for example, let me say a sell on a higher time frame, should we continue looking for other footprints on the lower time frame? So if we have a sell on a higher time frame, should we consider the buys that come on the lower time frames?
So you can consider them. They will still move, but you know that like there's a possibility they can be just short-term trades.
Yeah.
Okay. That time frame, but they will show you all the footprint steps. You'll be able to, even if that buy footprint that is being overtaken by a sell, to continue supporting the bigger time frame with the sell movement, just like I've indicated here. Just like I've indicated, it was around here with this movement. You took a buy, and immediately for even the first layer of that buy gets broken. So now it is time for a sell to continue. You still ate with the buy, but it was not a bigger movement. It was not a big movement. Of course, depending on the kind of a time frame you're dealing with. But do you get what I'm trying to say?
Yes, absolutely.
All right, no problem.
All right.
Let's see the next one. Hello. All right. So basically on that, what I do is that the initial trade is very important because it is the one that will accumulate funds so that when you make re-entries, you can be able to have more money in a form of profit and also equity and free margin. So like if you add a lot of trades on the first trade, you won't allow you'll be standing in the way of the moment. Okay, you can do that and it can go into profit, but I'm trying to consider the pullbacks and like remember initially when I'm placing a trade, I calculate the stop loss between where I've entered and my stop loss. So meaning that one, it is much regulated, not saying that the read entries are not regulated in terms of the stop loss, but I just know that the first trade I cannot be reckless because of I have a distance to consider. If I've entered a sell here, I know my stop loss is around here. Sorry. And the distance from here to there, I know if like I have, okay, let's say I'm using a certain lot size, this is 50 pips. I know that if the market goes against me until there, I have to lose the amount that I put in that account, in that specific account. Now, if I do not do that, imagine if I go reckless here and with just the movement going up, even not even it even gets to halfway of stop loss and I'm blown, like that will be very stupid because of like it will be like shooting yourself in the foot. So the best thing to do is that after you play those trades, start re-adding when the market is off at your initial place, if that makes sense. All right, no problem. Let's move to the next one. Okay, then if there are no questions, I'll have to start breaking down the strategy. Sorry, so that everyone can really understand. So I'm seeing something here and which can help. So if you go into, I'm on 15 minutes, if you go to about 1 hour, you will see this is a minor pullback. But as you can be able to see it on 15 minutes and you get full visual depiction of what is actually happening, you will see that there was a footprint set up to go up. As there was a footprint set up to go up, meaning after the market makes a retest, then you enter your buy here, estimate that the market goes up. You already know that your first point, it is this one. Second point, it is that one. For what? For your footprint line. As you're going to draw your footprint line, how immediately after the market goes, you find that the market has broken your foot and even your footprint line. What do? It is very stupid to continue to convince yourself that this thing will go up. So what you do, if it is not going up, it is shown you by breaking off the first layer. You close with the little profit that you would have made from where you've entered here to there. And after that, you spot the first sell divergence. After you spot the first sell divergence, you will continue selling that thing. Yeah. Mm-hmm. 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 Oh, okay. I understand you. I understand you. So now, if it's that case, let's see. What I normally measure with, ne? Let me show you something. What I normally measure with is if you have a situation where, okay, you have the first point, and after that, you have the second point. When you enter here, before you can conclude this as a second point, it must pass this point first, meaning it must pass that point so that you can consider it. Do you see that? Do you see what I'm trying to say? So that way it gives sense because of if you're entering it, the market can just consolidate in here and even go to the opposite direction. Are you able to see that? But now when you have a way of measuring it to a point where you know, okay, if this is will, if this can really be a the second point or what of the footprint, you have to measure it when it already exceeded, when it has made you profit, then it will be very much effective there. So that's how we measure it. Because even here, it has broken the thing. Doesn't matter if it comes back, but it has broken the thing. That's what we can regard that as a what? The first, because like if we go with the behavior where we can incorporate that, you'll find a situation where that's just a pullback and you draw your footprint line. Could like let me try to put it this way. It will put you in a position where you will even have to go into a lower time frame in order to break it piece by piece, because the footprint have a tendency of making people think, because you can spot a footprint like that. It's fine. After you spot a footprint like that, you draw your footprint line, you draw your first layer line, and the structure on their own, they become very small as you're moving from one structure to another. Let me show you an example of that. This happened after that. So you can see the first structure, it is not as big as the second one. And the third one does this. So what is this happening is that there are different different sized structures that can end up being confused as a regular retest or anything of that sort. And if you can be able to follow them, if you go into, let's say this, for example, this was 5 minutes. If you go into 15 minutes, you will just see this thing as a big retest here. As a big retest here. But this small footprints that formed from this bigger footprint, they made sense to a point where even if they supported that sell, but what my point is that they can get very confusing. So it is very important to track them like with your footprint and first layer lines, so that at the end of the day, even if the bigger movement it is supported, you can get how it was supported by making sense with the smallest footprint. Does that satisfy your question? All right, cheers.
Hi, Brian.
Hello? Yes, hello?
How are you?
I'm wonderful. How about you?
I'm fine, thanks. On that note, I'd actually like to make a suggestion. I don't know if you're open for suggestions,
Of
but
course.
I want to find out how possible is it that you can actually take us on a virtual bootcamp where we do live trading with you, so we can get into the thought process of how you take trades and scaling in. So maybe we take an account from $100 to a certain target, just like with adrenaline rigs. I don't know how open to that you would be, but I think a lot of us can really benefit from that. I don't know how open you are to that.
So okay, so if first of all, what I want to say is that it cannot be physical because of you guys are from all over the world, so it will seem very, very, very impossible to cater everyone into it. And I don't want that situation where some other people who feel left out. So that kind of a thing can be done even in the group Zoom, I mean in the WhatsApp group, because it's just a matter of illustrating the kind of a trade that we're taking. And I normally do that, share a footprint setup and saying that we're entering here. But what the way you're suggesting it, it must be more of a detailed form, showing what
Yes,
kind of a lot size, the kind of pips that we've calculated, when I'm adding re-entries, how
yes,
much lot size am I allowed to have for those re-entries, when
yes.
am I getting out of the trade, and how am I distributing my profits, and how am I going to risk a new on a new trade, that kind of a thing. Do you mean such a thing?
Correct. Real
Or
time. I think that can really benefit all of us. So a virtual would be nice because obviously physical is just a bit impossible. So I think we can do it on the WhatsApp group. I think that would be very nice.
yeah. So it's just a matter of looking at the pair that we can trade and I analyze it and show when we should put our stop loss, when we should give up on a trade. And if it gets reached to that point, then we'll take it to the opposite or even focus on one pair so that you guys
Mhm.
can understand how to break down a pair, because of like as footprint can be applicable on all the time. You can move from one pair to another, but it can even be more beneficial when you focus on one pair because you'll be knowing where that pair is coming from, and
Mhm.
you'll be knowing it's the bigger version of the uh, pair from the bigger time frame point of view to a smaller time frame point of view using the footprint. So yeah, it is something that I will do. It's not a problem. I can start today so that explaining that to everyone how everything unfolds, so that you guys can
Okay.
find a way to understand even more how the practicality works.
Okay. Thank you so much. We
All
look
right, no,
forward to it.
all right. Let's move to the next one. So after this, what I want you guys to do, okay, let me put it this way. What I will do is that those that are funded, there's some people that are still in the funding, so I will release funds for some now, and we'll focus on one pair that we can maneuver for the entire week, and everything will be posted in a group in terms of how we implemented trades on those uh, on the particular pair that would have been chose by then, so that we can take it from there. That way it will be beneficial for in each and every move. So, but for now, if you are new here, we're dealing with the footprint strategy. The way I've been drawing lines like this, very simple and very straightforward. We don't mix strategies. You don't please don't confuse yourself. Don't mix footprint with any other strategy unless if you know what you're doing, but please don't confuse yourself, because the more you confuse yourself, the more you will make mistakes. And if you make mistakes with real money, that's very stupid. Make sure when you start risking with real money, you know what you're doing. Even though you've been in a footprint and you're not clear with this thing. Guys in a group, they are working and they send out that they're willing to reach out and help on some of the things that really do not need my attention that much. So if you guys can engage in that level, it will be very beneficial, because there's some guys who've split footprint. Now they've mastered it. They're making very, 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 very nice results. And the main aim of this thing is to find trades that can change your life in a shorter space of time in a long run. Hope that makes sense. Leverage, that's what it comes to. That's what this thing is coming to now. So let's prioritize that. And when you send the result, be proud of leveraging. Don't be scared of leveraging. If you don't understand leveraging, well, try and find a way to understand it. And when I say ask me any question here, you must ask me what that the thing is. If you don't understand it, Because if you keep quiet, then it will be something that is a taboo to you, and we want you to find what this thing is actually capable of. Once you find the way this thing is capable of, you will see a whole nother level of trading. You will experience a different world. Trust me. Yeah, I've done it, and I know some of you have done it and are experiencing it right now. But the main aim is to be consistent with this strategy. And after you master it, there's no excuses of saying you cannot be funded and there's no money that is circulating. You guys know that I'm funding you. So if you can bring numbers, trust me, I will put you on. Strictly with the footprint. If you can bring numbers, I will put you on. I'm willing to, because I know that with the skill that I gave you, you can turn just a small grocery money to money you can even buy a house with. So that's how this thing it is very influential. So please don't take it lightly. Practice as much as you can. If you don't understand, ask me. And don't take advantage of this thing being a lifetime package. Like, you're wasting your time and you're wasting my time because of I'm doing Zoom meetings every day to make you understand more so that you can come to get funded and be able to make more for yourself and for me. So don't be a liability to me, please. Please be someone who's an asset, who's here for what they paid for, because you paid me a lot of money. 12K is a lot of money, guys. And I want to make sure you guys get good value for money. My clear, guys. And if you have any last question, shoot, nah?
Good day, Brian.
What's up?
Yes, Chef, it's Musa here. I was wondering, man, when can I have another one-on-one with you? Because the first one, it was a short one, and then you told me to learn the chart and manage to analyze or try to get to analyze it rightly. So when can I have one-on-one with you?
Okay, so then from there, I'll have to exhaust the ones who haven't done any one-on-ones, which I will also do when I get to the office from today. So immediately after those ones get exhausted, for now you can join the group Zoom meetings. The one-on-ones are just specifically to understand people's behavior from their previous mentor and how they used to operate so that I can channel them into knowing how to use this strategy and what kind of a mindset. So meaning knowing people personally, but the skill remains the same. What I'm teaching on the regular group Zoom meetings, it is the same. On the one-on-ones, I just want to interact with people on a personal basis to find out what kind of a trader are they and like what kind of behaviors do they involve when they're trading, so that I can alter that into the kind of behavior the footprint needs. So if you're having any issue, just outline the issues that you have now in the group, and if I need to draft anything constructive or illustrate anything to you by sending what you asked for in the group, then I can do